Good morning, everyone. Joseph Lackland here. It is Thursday, April 30th, 2026, and this is the pre-market morning report. We got some good action last night. The big tech earnings provided some volatility in NASDAQ after the closing bell. Let's look at that. We had some pretty good action right here on the cash close before the announcement, and then we had a recovery right after the announcement. So the market basically moved more than it did all day in that hour time left in the day. And then when Globex came out, the market opened up on the low and immediately shot up about 250 points, finally topped out around 27600. So that is a new all-time high in NASDAQ. And then the market proceeded to cascade lower over the next couple of hours. So we had a pretty powerful rally. We topped out, then we had a pretty substantial break where we came back to basically where we started the rally from and found support there. So this opening was the low. We went up, we went down, we retested that low, and now we're back up here at the R2 27505. In the ES, we have a similar pattern. We had a big whipsaw right at the earnings at cash closed, and we had the big strong candle, and we topped out in the ES above 7200. Right now we are just shy of the all-time high 7215, 7220 area. We did get some news out of the Persian Gulf. It looks like the war is not going that well. The escalation of conflict continues. The military buildup continues. The Strait of Hormuz remains closed. And that is putting even more pressure on oil and gasoline prices. Let's look at crude oil first. Crude oil went up to 108, just shy of 109 yesterday. A pretty strong rally. It has been rallying ever since the 20th. So we put in a low on the 17th around 80. We have steadily pushed higher about $30 over the last 2 weeks. So this is a pretty substantial rally in the price of oil. The market is sniffing out that things are not going to go back to normal anytime soon. It has a way of figuring this stuff out eventually, no matter what the dialogue is, no matter what the news says, no matter what comes out of the political social media feeds. The market is making its own decisions here, and that definitely has to do with the fact that there is a 13 million barrels per day shortfall in the world supply of crude oil, and that is a cumulative effect that is building. It is projected at 1.6 billion barrel shortfall over the next couple of months, and that number is just going to continue to get bigger and bigger the more disruptions are sustained, and the situation is not getting better. The gasoline is on a major technical breakout. It is stepping back a little bit. The high was around 366. That's the highest it's been since the Ukraine war started in 2022. We do have a lot more room to go. The high at the peak of the Ukraine war panic was around 5. So the gasoline was around the 5 handle. That's another 15,000 ticks from here at 420 a tick. So there is definitely room for the gasoline to go much higher. The prices at the pump are not reflective of what this futures contract is actually telling us. The prices at the pump could easily increase by 50 or 100% if this gasoline future keeps pushing here. And this is not a bearish topping pattern. This is a temporary setback. This is a very strong candle here. This is an extension, an acceleration at the top of the range. This indicates that the market has definitely enough steam to keep going. Here's the time chart for the gasoline. We did come off. We are making a new low here recently. So we went up. We hit the resistance at 366 shortly before midnight. We came back through the previous day's high. There's some technical profit taking and conversions here. So that pushed us down to about 352. This was the box range that we established on the initial power push up. So this orange box is acting as support temporarily. This is the opening range of yesterday NYMEX. We got a new opening range building right now, slightly higher above the previous opening range. We have our first support down here at 347 area. The market can still trade down to these levels and be bullish because we would still be basically inside the dominant candle right here that was established yesterday. If we look at the news headlines, we see that there is some definite friction between the parties now. The conflict is escalating. Donald Trump put out a picture of himself with a rifle with "No more Mr. Nice Guy." It should have said "No more lower gasoline prices," is what it really should have said. Russia says UAE's OPEC exit won't spark immediate price war. Well, we talked about the UAE exiting OPEC. They basically cannot operate their business, so they're bowing out for now. Their facilities are heavily damaged. Their ways in which they produce and distribute their oil has been completely disrupted. It's no surprise that they're exiting from this temporarily. ECB holds rates at 2%. FOMC, yesterday we held rates steady. It's not like they can really raise rates at this point because that's too much pressure on the market. And they definitely can't lower rates right now because there's already a massive amount of inflation. Whether or not they want to acknowledge that via the CPI or the metrics that they use is pretty much irrelevant. We know that there's massive inflation. This says futures jump overnight after roller coaster session as oil unexpectedly tumbles, yen source. Oil did unexpectedly tumble. The situation is getting monumentally worse every day. And even if we were to stop the war now, we still have a huge problem because production will not go back to 100% right away. It's going to take months, if not years, to get production back to normal, and we have that 1.6 billion barrel deficit that's going to be kicking into the global supply over the next couple of months. The oil and the gasoline have to be extracted from the ground, refined, produced, and distributed. So the solution that the financial experts have had to every single problem for years has been to print more money and lower interest rates and create more liquidity and perform a bunch of magic tricks behind the curtain to maintain the notion that things are getting better. Well, they can't print more gasoline. They can conduct all the hocus pocus that they want. They can say whatever they want. They can add digits to a screen. They cannot print more oil and gasoline. And they're going to figure out why this is not the greatest situation at all. So their usual playbook that they have to manage these kinds of emergency situations is not going to work here. If we peruse the rest of the headlines here, here's some escalation of conflict rhetoric right there. The oil price is definitely going to get a little bit of a lift with stuff like this. And we have more just, little snippets and tidbits about what's actually going on. This would be a good one. What does the end of OPEC mean for the Iran war and global energy prices? Let's click on this real quick. So did the UAE just trigger a once-in-a-century shift in global energy markets? The UAE on Tuesday said it was quitting OPEC by May 1st after 60 years as a member, dealing a blow to the cartel as the Iran war exposes discord among Gulf nations and Iran. So the OPEC oil cartel is not in the best condition right now, and that's going to lead to some things changing in the world and some pieces being moved around the board. It says the name of the game for OPEC is zero competition and artificial supply scarcity. OPEC was '60s as a trade consortium of oil producers, but it became an economic weapon in the 1970s to maintain pressure on the U.S. and any other nations providing aid to Israel. Well, they needed a way to, quote unquote, fight back against the constant aggression, shall we say, that Israel has displayed in the past, and that was the best way that they could figure out how to do that, was to combat the aggression by pushing back and using economic strategy. This led to a stranglehold on the 40% of the global supply, and initial explosion in gas inflation, prices quadrupling at the pump, feeding into a decade-long stagflation event. So, oil disruptions, when they happen, have a lasting effect, is basically what this says. So the lasting effects of this particular crisis are going to be felt for quite some time after the crisis subsides, and we're still in the middle of a crisis, so it doesn't look like that is going to get better anytime soon. Trading just started here. 2 minutes after the U.S. Open, we've got the S&Ps turning south after they hit the high. We've got the gold starting to turn down a little bit. The gold did rally quite a bit overnight, so the gold is now pretty strong. The gold has been going down over the last couple of weeks. We finally got above the previous day's high here. So we have not gone above the previous day's high for about 2 weeks now, ever since the 17th. This was lower, this is lower, 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 and now finally higher here. 46.40, 46.30 looks to be the breakout point. We did get below the lower deviation. We were threatening to trade a few $100s lower where we did previously on this panic move down. So gold is attempting to stabilize here. That really doesn't surprise me. People are looking for a safer place to put their value other than very expensive high-flying tech stocks. And you would think that one would be able to buy crude oil or gasoline futures contracts and simply sit on them and work their way through the war situation here, but due to the fact that large market shocks have been observed over the last few weeks in oil, where the price dramatically moves down all at once with heavy volume, either some massive profit taking all at once or some algorithm cascade that none of us really know what it is, but it makes buying and holding on to energy rather problematic. So the solution is not as simple as it may have been in the past. I'm going to get this video out. Hopefully I will get some good script demonstration footage later on today. You guys, good luck out there. Take care. Keep your eyes on the prize. Watch the ball. And I will talk to you soon.